If you have an unincorporated business as a professional, self-employed, or business owner, and you are looking for income tax tips to reduce your personal tax, then this is the right video for you. For individuals, the personal income tax planning opportunities are generally very limited. However, if you are a professional, self-employed, or you own a business, in a 3-part series, I have 12 income tax tips for you to cut your tax bill for your business income. This video is the first part of this series. Here is my first installment of 4 income tax tips for you. First, understand and maximize tax deductions. Second, reduce meals and entertainment expenses. Third, maximize home office expense deduction. 4, maximize car expense deduction. Now, let's look at each of these 4 income tax tips in more detail. Tip number 1, understand and maximize tax deductions for your business. You need to understand the rules in order to play the game, which is to reduce the overall tax bill for your family. As a general rule, any expenses not specifically prohibited by the Income Tax Act can be deducted to reduce your business income. Therefore, personal expenses are generally not deductible. There are also many exceptions to this general rule. If you incur expenses not deductible in computing your net business income for tax purposes, such expenses actually will cost you more in your before tax dollars. For example, say you are in a 35% tax bracket and you incur an expense of $100. If that expense is not deductible, you would need to make $154 of pre-tax income. You would need to pay to the government $54 in taxes on your $154 of income. You would then be left with $100 of after-tax income to pay for the $100 of non-deductible expense. On the other hand, if the expense is deductible, you will only have to make $100 of pre-tax income. The $100 of expense deduction would reduce your net business income to nil. You will have no income for which you have to pay tax on. Tip number 2, reduce your marketing expenses on meals and entertainments. If you take a client or potential client to lunch or a sport event, only 50% of such meals and entertainment expenses are deductible. Similarly, if you are registered for HST or GST purposes, you can claim input tax credit, but only for half of the HST or GST paid on such expenses. If you can find other marketing initiatives to build your client relationship, which will give you 100% tax deduction, you will then be able to reduce your tax bills for your business income. Tip number 3, maximize your home office expense deduction if you operate your business from your home office or use your home to meet clients, customers, or patients. The portion of your ongoing home expenses that you can claim as business expenses will normally be based on the percentage of your home in square footage that is used for your office. Here is the tip for you. In calculating such percentage, you can usually exclude common areas such as hallways, kitchen, and washroom. This calculation should allow you to claim a much greater percentage of your total home expenses as your home office expenses. In adding up the total home expenses for the year, don't forget to include mortgage interest and rent, property taxes, utilities, telephone, insurance, as well as any repairs and maintenance, lawn mowing, and snow plowing, etc. Although you can also include tax depreciation of your home. However, this is often not advisable because this will reduce your future claim of principal residence exemption when you sell your home. Tip number 4, maximize your car expense deduction if you use your car for your business. Parking and toll charges for business trips are 100% deductible. All other car expenses can only be partially deductible based on the percentage of the total mileage for the year that is for business use. If you have a home office, the mileage traveled from your home to your clients qualifies as business use. If you do not have a home office, the mileage travel from your home to your own office and vice versa do not qualify as business use. Here is one more tip for you. You can increase the business use percentage of your car by scheduling business appointments on the way to and from your office. In adding up the total car expenses for the year, don't forget to include all the gasoline costs, licenses, insurance, car washes, CA membership fees, repairs and maintenance, as well as the leasing charges or the tax depreciation for your car. Here is another tip for you. If you own more than one family car, use the newer or the more expensive car for your business. This will normally give you a much greater deduction of tax depreciation for your car. As a recap, here is my first installment of 4 income tax tips for you. Thank you for watching. I am Claudia Koo, your trusted tax accountant. I hope you find the video useful. Share the video with your friends and your family if you think they can use the information. Let me know your thoughts or if you have any questions in the comment box below. And don't forget to subscribe my channel to watch my upcoming videos. Also click on the link to my website to receive our free email service of tax tips. See you in the next video.